Good morning, retail traders. I'm Washboardjim with a sneaky snake trading strategy where I like to talk about chart patterns, moving averages, and being in the now. And I'm going to talk about a trade that I called out on Friday. It's one of my favorite chart patterns. It's called the falling wedge. This will be this week's lesson, so if you ever see these come up, keep a good eye on it. So the first thing I talked about is that we were down here at the 200 EMA and SMA on the SPY and on the SPX. So SPX, I traded them both Friday, but I want to show you what I saw on the falling wedge when it was time to take the trade to go to the upside. And there's a couple ways I go about it. First, I try to zoom out, look out, and see where we are at support. And I've been calling this 200 SMA all week long. This is a daily time frame. And then on the weekly time frame, we were building a foundation of three black crows. We had these three black crows, 3 red weeks in a row. So that's about a time you start to see a reversal in the stock market. So on the weekly, we had the 3 black crows, and then on the daily, we had the 200 SMA. We were bouncing off that 200 SMA Thursday, and we closed above it. And then again, we closed above it on Friday, but we had a pretty good little sell-off past the 200 EMA. This is the EMA, and this is the SMA. So as my strategy goes at the beginning of the intro, I talk about chart patterns, moving averages, and being in the now. So now we bring this up to the 1 minute time frame. And this is what we saw on the SPX. Take this to the 5-day. 5-day, 1 minute. That way we can get a better look at it. So we were in a downtrend. We were calling out puts, and then I was taking the bounces to the upside on these trades once we hit a certain area. Then right around 11 o'clock, I was out taking care of my car. So when I come back to the room, it was about 11:30, 11 something like that. And we were down here at the bottom of this here wedge. And I'm going to draw this wedge out for you. We'll go to the trend line, and we'll take the top of that candle right there and run it on down to that next candle. Then we'll take another trend line, run it from here to that candle, and run it all the way down there. So that's what you call a falling wedge. Falling wedge. And this is, I'm going to go ahead and put this link in the bottom in the content. So this is a good educational platform you can use when you're looking up chart patterns and stuff. And it's called Chart School. The falling wedge is a bullish pattern that begins wide at the top and contracts in price and moves lower. This price action forms a cone that shapes down in the reaction of highs and reaction of lows as it goes down, lower lows and lower highs. The contrast to symmetrical triangles, more or less, is what it is, but it's a falling wedge. So you can also like to, when I'm looking at chart patterns like this, I'll put this link down in the content so you can follow it. I also like to go to images. When I'm looking up chart patterns, I'll type in falling wedge, and I'll get ideas and more information about what is a falling wedge. And I've learned how to count to 3, so I use part of this strategy when I'm using like 1, 2, 3, 1, 2, 3. Boom, she breaks out. Usually that's when the sweet spot appears. 1, 2, 3 breaks out. 1, 2, 3. It starts to consolidate and breaks out on number 4. That means you might make a little bit more. Same as right here. 1, 2, 3. 1, 2, 3, 4. Boom. So that's the sweet spot. If you know anything about baseball, same as right in here. 1, 2, 3, 1, 2, 3, 4, boom. That's when you really want it to break out. That's so you can kind of predict when it's going to happen. This one only came down twice and broke out on that fourth time. Sometimes they'll break out on a third, but if you see a little pullback on the third top, it could easily just want to go ahead and just kind of consolidate and then break out again. And here we had a two-headed snake on this chart, where we had two heads. We had the left shoulder and the right shoulder, and she broke out. So they're called falling wedges. We had a little breakout, and then it pulled back. I never tell anybody to chase the stock once it breaks out, unless it's just going to go get some kind of news and it just runs periodically all the way up. But in this case, it pulled back and it created what you call a head and shoulders down here at the bottom. And I'll put that little trend line in here, just like that. And then we also had a 1, 2, 3 down at the bottom, triple bottom down here. So we had falling wedge with an inverse head and shoulders, came back and retouched that shoulder for the second time, and stayed above that resistance line. Stayed above the resistance line, and that was when she really started to break out. She came back and pulled back and hit the 63 and then run up and hit the 200. Now I got out of this trade early, but I was able to scalp it again once it pulled back and jump right back in where I got out of it at. And that's right off the 200 EMA. Came back and retested that 200 EMA like it did here before. So it already gave you a pre-warning that it was going to break out. So fallen wedge. Now, when I'm looking at these here resistance lines, I'm looking for the body to touch. Like the body hit here, the body hit here, and then the body broke out on the third time. Same as down here. We had 1, 2, 3, boom. And it went ahead and run on up, and then the double top exit at the end of the day. And this thing really added up to a lot of money by the end of the day. So this is called a falling wedge, breaks out, pulls back, created an inverse head and shoulders with a 1, 2, 3 bounce off the bottom right there. And it came back and hit that right shoulder and stayed above that resistance line, and that was time to take the trade. See, I probably would have took it maybe for sure right here on the second shoulder line. These inverse head and shoulders, when it pulls back that second time, that's almost always a go right there, if it decides to go ahead and run on up. You have plenty of time to take this trade. Like once it broke out, you had 5, 10, 15, 20, 25 minutes before it decided to go ahead and run and break out. But notice the cone with the lower lows and the lower highs started squeezing, started getting tight. So you know you're getting ready. You know the time's about right for the thing to break out if it wants to go ahead and stay bullish. I'm keeping in the back of my head that we're bouncing off that 200 EMA and SMA, and a lot of bull traders, a lot of fat cats, they want it to respect that 200 SMA. And if it stays above that 200 SMA, we have the possibility of this coming week to have a pretty good bounce. We might come back and retest it again. You never know. But always keep in mind that 200 SMA on the daily time frame is going to be your solid support. So this is called a fallen wedge, breakout. We had inverse head and shoulders. We had a little 1, 2, 3 bottom right here. And then she finally just went ahead and run on up. And I'm using my moving averages. See, sometimes when I get in trade early and it pulls back and I'm feeling real good about it, I'll add on to the trade. For example, if we broke out here and she pulled back and I jumped in the trade and it run up a little bit, then it came back and retested, I'd probably add on to the trade. I think I added on 3 different times to this trade. I went in small, and then when it pulled back, I went in a little bit bigger, and then I doubled up every time it pulled back because I was feeling more confident about the trade. Also, at the same time we broke out here, which was right around 11:19, I got another chart that I look at we've got the VIX, and we've got the VWAP. And this is on the SPY. So you could either trade the SPY or the SPX, whichever one fits your groove at the time. If you can't afford to trade the SPX all the time, you can get in here and trade the SPY and build up a small count. So right out of 1119, if you go up to the time frame on here, we hit that top. We hit that top. And that was a 1, 2, 3 triple top right there. And when that VIX falls down, that means your stock's going to rise up. So right here at 1120, 1117, if you go over here and look at the time frame, you're right at 1113, 1117, right there, and she starts to break out of that channel and move on up. So I'm watching that VIX, and the more it drops, the more I want to stay in this trade. And it ended up, dropping all the way down to 23 by the end of the day. And that's right up here at the top. So you can use that VIX. You can use the VWAP with a SPY for a resistance level. You can use the moving averages. And you've seen the double top up here for the exit idea. And then at the end of the day, someone in the room, Rob, got in this trade and run it back up and was able to make like $3 or $4 a contract just on this little move right here at the end of the day. And it came down and almost touched that VWAP. So always keep in mind, the falling wedge, look for the sweet spot, especially when it starts to squeeze and it gets real tight down here. It could have went on forever, but as long as it started staying above that resistance channel and then had that little pop, then the 9 crosses over the 21, the 9 EMA crosses the 21, and then they just cross the rest of the moving averages, and it respected that 9 all the way up. And then we had 3 black crows, and I called this trade out when I was in the room. I said, hey, we got 3 black crows off the 200 EMA right here, and it looks to me like we're going to have another bounce back up. So that's exactly what she did. Again, I got out at the double top, but I'm talking about $2 a contract, $2.50, $3 a contract on a little bitty run like that. If you get 5 contracts at $3, that's $1,500 right there. And this could have been cheap. Could have paid like $5, $4 a piece for each one of them. So that's it. That's part of the lesson today. It's the falling wedge, inverse head and shoulders, that right shoulder. Look for that sweet spot when it starts to squeeze and it breaks out and runs up to the upside. And then look for the next resistance levels, like this little place right here. Would have been, see where you hit right here and where it hit here, it pulled back a little bit. But then, it finally pulled back big time right here, and I was able to get in. Once I got home, I took this trade here, and then I took this trade right here, and I run it up, and then I just kind of watched it go up the rest of the day. Scalped some other stock at the same time, and then I'm going to go ahead and put this link stockcharts.com, and I'll put that link in the bottom of the content. And anytime you need to look up a chart pattern or something, you just ask this search bar and it'll take you to that chart pattern. And there's a lot of good stuff. This is what I used to use when I first started trading 20 years ago, and it was a lot of help. So I wish everybody a great week. I'll come out with another watch list video tomorrow. This is the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Have a great day.